Hi, it's Katy Mackenzie, mortgage professional with TMG The Mortgage Group and your host of I Love Vancouver Real Estate. Thank you for taking the time to be with us today. It's my pleasure to be here with Clinton Grayson, Business Development Manager with Home Equity Bank for the Greater Vancouver Southwest region. Home Equity Bank was founded in 1986, becoming a Schedule I bank in 2009, and is the only provider of reverse mortgages in Canada. Clinton brings more than 25 years of business experience in a broad range of disciplines, but is most passionate about having the ability to help retired and soon-to-be retired Canadian homeowners realize their dreams and goals to live a vibrant and enjoyable retirement. Clinton, welcome to the podcast.
Hi, how you doing, Katy?
Good. Thanks for taking the time to be with us today and talk about all things reverse mortgage.
Well, my pleasure. Thanks for having me. I'll be truthful. This is my first podcast, and I'm excited.
I know you told me that, and I was like, ooh. Let me start off by asking you, what is a reverse mortgage for our listeners?
That's a really good question. The term reverse mortgage, I don't know if it's the most apt term for our products, but it's definitely out there in the industry. In a nutshell, it just means with a traditional mortgage where you're going to make principal and interest payments, or something like a home equity line of credit, or typically called a HELOC, you'll make interest payments each month. With a reverse mortgage, you get to access the equity in the home, but you don't have to make any monthly payments. Mm-hmm. And that's where I think the term reverse mortgage originally came from, because people started taking an income stream from their home. Mm-hmm. And really, the term that I like to use is just activating your home in retirement. Mm-hmm. That's the term that I think really kind of illustrates what a reverse mortgage is for a retired senior.
I agree that term of paying into the home for the entire life of your working years, now you're accessing what you've paid into in that retirement stage or while you still are working but needing to supplement your income. So I like that definition.
Yeah, it's a great way to look at it. And if I could add to that, one of the nice things about a reverse mortgage, you mentioned people, paying into it. That's kind of like a savings account. It's very similar in the sense where someone will pay into an RSP plan or into a retirement savings plan of some kind, whether it's registered or not. And then when retirement comes, they'll tap into that to help fund retirement. Mm-hmm. The nice thing about a reverse mortgage is when you get to tap into the house, you're not actually depleting the value of the asset that is growing. So that underlying asset, in this case in the house, even though you're tapping into it, there's still the same amount of equity there that is growing in the housing market, right? So it's a bit of an advantage that way.
So who is an ideal client for a reverse mortgage? And why would we have them in a reverse mortgage as opposed to a conventional mortgage?
Really, by design, I think, is where that line gets drawn. So we start lending at 55 years of age. Some people do retire at 55, but not a lot. The primary focus of our products are to help those seniors who want to stay in their home do that for their entire retirement until they decide to move or sell. Mm-hmm. So who is one for and who it fits is really kind of gauged by what their position is in relationship to retirement. Mm-hmm. Okay. Once somebody retires, they become on fixed income. It doesn't matter if you've saved $1 million, if you've bought a home and it's valued now at $1 million or $2 million, which is not uncommon in Vancouver. Yeah. But the day you retire, now there's no more working capital. If we look at the difference between the products, a traditional mortgage was designed to help people buy a house, not designed to help people stay in a house. Okay, so the same thing with a home equity line of credit. They're designed for people with the intent of them paying them back to a zero balance at some point in the future. Whereas a reverse mortgage is designed not to be paid back until the time the home is sold. Okay, so the day one of retirement, quite frankly, it's the richest day for the rest of your life. So that's when cash flow becomes the most important thing in a retirement plan, is increasing and improving cash flow throughout retirement. And it's hard to do because most people are depleting their assets once they retire. That's where it really shines. The day that somebody moves to fixed income, and sometimes it's because of disability, it's not necessarily a planned retirement. Sometimes things happen. And maybe some people don't get to fully prepare for retirement like they intended. And I helped a gentleman last week, and an example is probably a better way to describe this. So this gentleman, he was about 6 years away from retirement, had a great job with a company that had a defined benefit plan for him, so retirement was looking good. And they had a fairly good plan looking forward. Well, he got hurt at work one day, hurt his back, and at his age, he wasn't able to fully recover and was never able to return to work. So retirement started 6 years early for him. Even though he was getting disability, it was only 40% of his regular working income. So his retirement plan actually stopped the month that he got hurt. He wasn't able to put money away when generally most people are putting away the most of their savings in that last 10 to 15 years. So not only did he lose half of the ability that he had to meet his plan got restricted. And then something worse happened. 2008 happened.
Financial crisis.
And what savings was put away got cut by 30 to 40%.
Yeah.
And so now he's facing with this plan. Him and his wife had planned on living their life out in their home for as long as they possibly could, and that was jeopardized. But the good news for them is they bought a home 35 years ago. They paid just under $100,000 for it, and the property is worth $2.5 million today. And the one great thing that they did do is, even though they hadn't paid off their mortgage, it was almost paid off. They only had a $100,000 mortgage outstanding, which was all in their plan to be paid off by the time retirement came. What we were able to do in this situation is we were able to use one of the two available reverse mortgages called the Income Advantage. It's a great product that allows a lump sum where we're able to pay off that existing $100,000 mortgage, and another account that allows them to tap into the home on a monthly basis. So to reach their original plan, they only needed to add $1,100 a month to their income each month. Well, because the money from their home is tax-free, they really only needed to take out $800 a month to achieve that. Now they have a 25-year plan moving forward where they can stay in the home. And that's really where a reverse mortgage shines.
Now, I can see objections coming up, and I know they come up all the time in talking about accessing the equity of your home. But that understanding or feeling like, oh, if I'm drawing on the equity in my home, isn't that a negative? It's, how do you overcome or talk to people about the fact that this is a benefit to them, that they can stay in the home, they can manage their monthly expenses and have cash to spend time together and go and enjoy their lives together? How do you overcome that objection?
I do get that objection from quite a few people, but I don't always frame it as an objection. I always take it as, explain this to me. It's really them asking a question. I don't understand how these products work. Explain them to me, then I can make an educated decision. The way that I'd like to frame it for them is, it's just like what we've already talked about. They put money away. They're expecting to use that money in retirement. The reality is they are actually going to use the home to fund retirement at some point in retirement.
Yes.
So, and how they do that is traditionally they'll sell the property and then free up equity. The difference with this is they can free up equity without selling the property. And there was a great study that was done about 16, 17 years ago by one of the big banks, where they asked people that were in that 50 to 55 year range how they were planning to fund retirement, how much had they put away for retirement. And one of the conclusions they had is more than half of the people that were surveyed then said that they were planning on selling their home and downsizing. That's how they were going to fund retirement. But you fast forward 15, 16 years, and one of the most recent surveys that was done in 2014, they asked that same demographic of people, now that you're retired, what are your plans? Well, 84% don't want to sell their home.
Yeah, they want to stay.
Yeah, so once that retirement happens, now the question becomes not, why a reverse mortgage? The question that is more relevant is, how do we meet the needs of people that want to stay in their home, right? And quite frankly, living in Canada and buying a home is one of the best investments they could have ever made.
Yeah.
So they're going to have that opportunity.
Yeah. Now I see this as a great opportunity for clients, just like you've mentioned, that want to stay in their home but want to help their children or even their grandchildren get into the market. And so, I see this as an opportunity for them to access that equity without obligating themselves with an additional monthly payment and enabling their children or grandchildren to do so.
That's definitely one of the growing aspects of this industry, especially in some of the markets like Vancouver, Toronto, Montreal, Ottawa, where home values have exceeded the national averages over the last 15, 20, 25, 35 years.
Mm-hmm.
So one of the challenges that we all know is out there, it's in the news, people talk about it, is first-time buyers getting into the market.
Mm-hmm.
And people don't typically think of reverse mortgages as a potential solution for that. But a house, not only is the equity tax-free, it's their money to use how they want to use it.
Mm-hmm.
So it's not uncommon. It's not the biggest part of our business, but there's a lot of people, parents or grandparents, that are helping their children and grandchildren not only get into the housing market, sometimes it's paying off debt.
Mm-hmm.
I've had grandparents who have taken out money to pay off student loans when the last of their grandchildren graduated from university. And what an amazing fresh start for those grandkids.
Yeah.
And it's actually quite amazing. I can tell you, every time I see one of those, and I kind of use the term that I like, a warm inheritance, because they get to see their children or grandchildren benefit from what they're planning on leaving to the estate anyway.
Yes.
Right?
Yes.
And I mean, I'm not a financial planner, but there's a whole nother avenue where, $1 today is worth a lot more than
Yes.
$1.15 or 25 years from now.
Absolutely.
Right?
Yeah.
So, and the impact that it can have for the children. Let's use a real world example. So one of my clients that I had, his property was worth almost $3 million. He had 3 daughters, and one of his daughters was going through a divorce. And she wanted to keep the family home, but she didn't have enough money to buy out her ex-husband.
Mm-hmm.
So he didn't want to just help one of his daughters. He wanted to help all of them if he was going to help one. So what he was able to do is he tapped into the equity in his home using a reverse mortgage. He gave $400,000 to each daughter. So not only did it keep the one daughter that was going through the divorce in her home and allowed her to maintain ownership of it, his other 2 daughters are now mortgage free.
Mm-hmm.
Right? And I mean, I asked him if he would like to adopt a son.
Of course.
But quite frankly, their lives are different moving forward too.
Yeah.
In fact, I know because I heard from the referral partner that I dealt with the client that one of the daughters has now bought a vacation home
Mm-hmm.
and just got a small mortgage to put on the vacation home because
Yeah.
they still had some funds left over. And I mean, that's life changing for
Absolutely.
that whole family.
Yeah. Not just one person, multiple families,
Exactly.
and generations. You mentioned earlier that we think of a reverse mortgage as taking equity out of a home, but it can also be used when you are downsizing for purchase purposes. And I've seen an example and scenarios of that where somebody is selling because they are ready to downsize, but wanting to keep some cash back and live off of that money and invest that, but also wanting to get back into something that might be then outside of the price point of the cash that is remaining.
Yes.
So if you can just sort of explain how that would work, a reverse mortgage for a purchase.
Sure. Well, there's 2 ways that we can be used for a purchase. We can be used for a general purpose, a purchase. And I'll use 2 examples where it worked out well. So in the last 5 years, all the clients that I've dealt with that have been downsizing, the number one reason for the downsize was to free up money.
Mm-hmm.
Okay. A lot of them had existing mortgages that needed to be paid out, which quite frankly, downsizing made sense to them. I'm going to use a case that I'll coin the phrase right sizing, where downsizing actually didn't make sense for her because for where she wanted to live, she actually couldn't afford the neighborhood because she would have to use all of the remaining funds of the sale of her property because of the existing debt she had on her property.
Mm-hmm.
And so what we were able to do is the mortgage broker realized this, asked her, where is it? let's put money aside for a minute. Where is it that you want to live? Right?
Mm-hmm.
And it turned out she wanted to live close to the beach, so either English Bay or near Jericho somewhere.
Mm-hmm.
And quite frankly, she wasn't going to be able to do that and free up money to fund retirement. So what we were able to do is come in and help with the purchase of it. So we can actually run through the numbers because I like using this one because it's a good example. So the sale of her original home was $1.4 million in Burnaby.
Mm-hmm.
Okay. And she had just over $350,000 worth of debt. So after realtor fees and everything were taken out of it, she was going to be left with about $1 million.
Mm-hmm.
She found her condo of her dreams, but it was going to be $950,000. That was
Mm-hmm.
only going to leave her after transfer taxes and whatnot. She's only going to leave her about $40,000. That's not a lot to fund the rest of retirement.
No.
Based on her age and the condo, we were able to help with the purchase of $400,000. So now she has $450,000 remaining from the sale of her home
Mm-hmm.
to fund retirement.
Mm-hmm.
She gets to live where she wants to live, like within walking distance of the beach in English Bay. And she's literally living her dream in retirement. And it's an amazing thing to see how that changes people.
Yeah.
One of the other things, and this is a pretty interesting case, where I had a couple who had downsized, and I don't actually remember how long ago it was, but it was more than 10 years ago. They had downsized. And, houses 10 years ago weren't quite worth what they are now,
Mm-hmm.
okay? They had put money aside, bought a condominium, and then rented. So they bought the condominium for an investment, but then went and rented their own place to live in.
Mm-hmm.
Okay, and they put some money aside, but that money was running out now. They were concerned that when the money was gone with the value of the condo, they were either going to have to stop renting and move into the condo, which they didn't particularly want to move where the condo was, or they would have to get back into the market themselves for a place to live. So what we helped them do is they decided to sell the condo, the rental condo,
Mm-hmm.
where they didn't want to live, and we helped them with the purchase of a new one. And they actually got into a townhouse that is gorgeous. We gave them 35% of the purchase price. That still freed up enough money for them to continue to fund retirement
Mm-hmm.
and help with that purchase. So sometimes it's coming from both sides of it,
Yeah.
right? But yeah, it's definitely something that I don't think everyone thinks about using a reverse mortgage to help with a purchase.
Yeah, it's creative because, and I use that word because it opens up opportunities that people don't see at all. And there's a number of ways of using it, as we've talked about, offline, because we cannot offer tax advice or legal advice in that regard. But there are some tax efficiencies and things that you can do when you're working with a financial planner. And using a reverse mortgage to actually create a better financial picture for yourself that you didn't even know was possible, outside of changing your life and or future generations' lives as well. So lots of opportunities for this mortgage to change your life. So is there anything else that people should know? I mean, we've only got a 15-20 minute podcast. We could talk for an hour, like hours on this, but is there anything else that we should leave our listeners with, other than, of course, reaching out and getting in contact with us to ask more about it as it relates to their specific situation?
Absolutely. A lot of the things that I see and I hear from a lot of our partners is, if you're going to be updating a home, if you're going to be making improvements, letting the home make those improvements rather than depleting your retirement assets is a much smarter move economically, but also in the value of the property. I had one couple who they did about $200,000 worth of renovations because they wanted to stay in the home.
Mm-hmm.
They wanted it up to date, and just for fun, they had it appraised post work done, and they got about a $300,000 lift. So they let the house not only pay for the improvements and the renovations on the house, it actually improved the marketability and value of the home.
Yeah.
So for renovations, anything in doing the house, if you're retired, depleting any registered funds can have huge tax implications for you. It can affect other sources of incomes, where with using a reverse mortgage, you can actually let the house pay for the house and the improvements to the house and really get what you're looking for out of it. One of the other things that is worth talking about that, maybe just that income stream. We haven't really, narrowed down on that. We talked a little bit about it, but for somebody who is living month to month, the possibility of bringing just a little income stream can be life-changing for them, right? As little as $500 a month can change somebody's life so drastically. Most people actually can't comprehend it. And I have had clients who, they have children that are living close by, but they don't know that their parents are suffering in silence, because a lot of the older generation have that idea that, I've made my bed, I'll sleep in it. Often when I get referred to them and I say, and what a bed it has been, and I'll often point out to them, I'll ask them, do you remember what you paid for their property? And, I hear amazing stories like, we bought this in 1973 for $37,500.
Yeah, sounds like my parents.
Yeah. Well, my dad, exactly.
Yeah.
And their tax assessments, forget the market value, but their tax assessments are millions.
So people are looking for a reverse mortgage. Not all mortgage professionals or mortgage advisors or specialists are licensed to offer this.
No, so we do partner with a few different channels, but within the mortgage broker industry, you have to be a certified reverse mortgage specialist. And so if you're dealing with somebody, it's worth asking, have they been certified to do these products? And the beautiful is it's an add to the mortgage brokers, like yourself, is, understanding the nuances of the product. And I can speak from personal experience, being a former broker myself and, working with the bank for the last 5 years. I truly didn't understand it until I really looked into the products myself, and it really does change your perspective. One of the reasons that I came to work for Home Equity Bank is because when I took the time to actually look into them to see what they really are, instead of, the rumors and the myths that I heard out there, I saw how good they really were and how they changed lives. Yeah. Right. One of the things that we did talk about before, real quickly, and I know we're running out of time, is really to circle back around of what a reverse mortgage client looks like. And I just want to circle back on this, because a reverse mortgage client is anyone who owns a home in Canada. And they're 55 plus, primarily if they're retired. That's really the thing. And it doesn't matter if, if you're house rich and cash flow challenged, or if you're mid to high net worth. Some of my financial planning and investment advisor partners use our products to tax optimize the plans for their clients, where they pay less tax over time and end up passing more onto their estate when the time comes. So it really is a broad spectrum, and if anybody wants to reach out to Katy here and ask for it, there's a lot of great studies that can be passed on as well from some of the best economic minds in the world. Gentlemen like Robert Merton, who is professor of economics at MIT, the Stadler brothers, who are 2 PhDs in economics, but they're also practicing CFPs. And all of them demonstrate that activating your home as part of a plan for retirement is a smart thing to do. So it's not typically what people think it is, and it's certainly worth looking at so everyone can make an educated decision.
Absolutely. So if anyone that is listening to the podcast today has questions as it relates to their personal circumstances, someone they know, family member, please do reach out. I say that at the end of every podcast. There is no dumb question. We welcome questions and have the information. The purpose of the podcast is here to provide this information in an independent and objective and unbiased manner. We just want to make sure that people get the information as it relates to their personal circumstances. So, Clinton, thank you for coming on the podcast today, your very first podcast. If people wanted to reach out to you directly, how do they reach you?
They can reach me on my cell phone. The number is 778-846-2346. And just mention that you heard me on the podcast with Katy.
Perfect. Perfect. Well, and if you need to reach me, of course, through my broker website at mackenziemortgage.com. Thank you for taking the time to be with us today. Again, please do reach out if you have any questions. Make sure you subscribe to the podcast on iTunes, leave us a review, and share with your friends. And until next time, I'm Katy Mackenzie, mortgage professional with TMG The Mortgage Group, and your host of I Love Vancouver Real Estate.